All right, well, good afternoon, everybody. Welcome to the April 12th Bull Sessions. My name is Mark Robertson. I'm joined here by Ken Cavola. Good afternoon, Ken.
Good afternoon, Mark. Beautiful afternoon today. I'm sitting in a new place in my home because my dog is really irritated by a pack of feral cats that we have running around the neighborhood right now.
Getting
So,
her, getting her attention.
yes, she is. Yeah.
Wow. And we're also joined here by Kim Butcher. She's going to be able to be with us for a few minutes here this afternoon. Good afternoon, Kim.
Well, hi, Mark and Ken. I hope everybody's doing well.
Now, are you tracking those cruise boats? Are they coming and going with more
Full,
regularity?
full force. Full force.
Full force cruising. Okay.
Oh, all the time. And now when you see the cruise ships go in and out, it used to be that you would only see a handful of people up on the top as they watch going in and out. It's getting more and more people up there. Like the ships are getting fuller and fuller.
Yeah. Well,
I don't think they're at 100% yet, though, but.
Yeah, I think it was Carnival reported one of their best quarters in maybe ever fairly recently. So you never know. All right. Well, let's go ahead and dig into some other stuff. We did leave the Twitter birds up there because Elon and Twitter continue to be a story. Ann Manning actually inspired much of this session here today. We're going to actually go back and take a look at stock selections we've made over the last couple of years at our series, which we call Successful Investing, but we have actually sub-dubbed it. I guess if we can sub-dub anything. Is that okay with you, Ken? Sub-dub?
It's okay with me. Sub-dub, yeah.
COVID Cancellation Conferences 1 through 4. And hopefully that string will come to an end soon. Although just this morning, Ken, I'm hearing talk of conference and event cancellations now again. So what a nightmare. But we're going to go ahead and take a look at the selections that have been made there, and along with digging into a couple other topics. And let's go ahead and get underway. Here's the legal beagle paperwork. No investment recommendation is intended. We do see a whole lot of familiar names on the list here today. Welcome back, everybody. You guys all know that this is an educational demonstration, and please do your own homework. Everything that we do here is intended to illustrate and demonstrate the methods and techniques of the modern investment club movement as interpreted by Manifest Investing and championed by the Investment Club Association. The umbrella organization is known as the National Association of Investors, now formally Better Investing. So please do your own homework and make your own decisions. We will be sharing opinions with you. If we happen to hold securities, we try to remember to disclose that. Once a month, we do a roundtable. Sessions that we'll be describing here today are not roundtables. Those were special educational sessions that we did. The roundtable goes back about 12 years now and is almost always on the last Tuesday of the month. And at 8:30 Eastern Time, if you want to be added to a reminder list about that particular event, send an email to ncabula1@comcast.net. If you have any other follow-up questions or need anything else, my email address and Ken's email address is at the bottom of the page. All right. Well, let's go ahead and just chat a little bit about a couple things before we dig into those stock selections made over the last couple of years. I found this one kind of interesting, Ken, because I think it helps to maybe temper expectations or provide a little bit of context here. What you're looking at is April stock market performance going back several decades, and basically illustrating what a typical, and I'm doing air quotes right now, a typical April stock performance looks like. And you can see that most years it's actually pretty good from left to right. But what the author here has done is interjected and separated out the years that happen to be the second year of a presidential cycle. And he's basically pointing out a couple of things with this chart as I understood it. First of all, there is a kind of a tax effect there. The investments that are made into IRAs this time of year are actually pretty substantial. It's one of the reasons that you see Invesco doing all the advertising on QQQs right now and during the NCAA basketball tournament, because they know that money is looking for a home to be put to work, and that's why they do that. And that kind of explains a little bit of the hump in this chart. But the other thing that is noticeable is, again, in the second year of a presidential term, it's just a little bit more lackluster. And the numbers are down there at the bottom of the page. How did this grab you, sir?
Well, like a lot of these predictors, Mark, it's an interesting fact, but it's not really something you can rely on. I'm not sure there's enough data here, although it does go back as long as I've been alive. So maybe there is more data than I want to admit.
Oh, that is a subject for another day.
Yeah, but it's just one of these curiosities that, like I said, it's interesting to look at and to think about for a little bit, but you can't depend on it happening.
Yeah, and that subject for another day. We've talked about it a little bit before, but I often respond to people with sample size question mark, and that has to do with a lot of the stuff that we do. I mean, and especially the stuff that the technical analysts do with their charts and their scratchings. There just is not a lot of data, in the stock market and the systems and stuff. And again, sample size is almost always in question for most of the stuff that we do. But the Hearst Almanac, Stock Traders Almanac, is kind of an interesting beast, and they had some fun with this.
So, Mark, I'm just going to ask one question about their methodology, and maybe you don't know. In the 50s, for example, Eisenhower was president for 8 years. So is this just tracking a single year of his presidency, or is it tracking 2 years of his presidency?
Well, I think the solid ones are that day in April for every year in the entire span. So it's what was the gain in the stock market between the 1st and 2nd of April, averaged over that's 54, 75 years. So it's the entire thing. The dotted ones I understood to be just the second year of a presidential term.
So if you're a president for 8 years, there's just one data point on here then for your term.
Probably,
right?
Probably
Okay.
would be my interpretation.
Okay.
But I don't know for sure.
So there's really not a whole lot of data points, because you have to remind yourself that there's quite a few 8-year presidents from 46 to the present time, and if that's one data point, not many data points to really graph to come up with trends and everything. It's interesting. That's all I'll say. Yeah.
Yeah, a little while back we did take a look at the returns based on who was in the Oval Office, and basically proved that it just doesn't matter.
Doesn't matter very much. We also, I think you flashed up a graph about the Super Bowl winner, whether it was from the old league or the new league, and as to how active the market was going to be when one kind of team won versus the other. But they're all just they're all curiosities.
Yeah, that one's definitely vulnerable to sample size, no doubt about it.
Yeah.
All right. And we're going to come back to this one, but we hadn't displayed this one in a while. I did want to point out that our entire database, which will be uploaded later today and updated, has been updated for the entire period 2022 through 2024 with the analyst consensus estimates, all of the stocks and value line, not waiting for the cycle to complete itself this year. And basically what you do see is the COVID moment in 2020 and what it did to profitability. And but the really head scratching thing for me, Ken, I'm sure it probably had you when you first saw this too, is these numbers are quite high. And as you'll see here in a few weeks, the 2026 numbers are actually up here somewhere. So I'm having a hard time with that.
We were here before, weren't we, Mark? Where we looked ahead and saw forecasts that were much higher than we anticipated. And as we watched them over the year, didn't we watch them kind of mellow out a little bit and move back to the means? And meanwhile, didn't some of the gappy stuff kind of fill in? Everybody kind of reverting to the mean, not all the way, of course, but haven't we been here before? Wasn't this exercise, weren't we doing it in the middle, like in the 15, 16, 17, 18 time period as well?
We've done it several times, pointing out that basically that blue line is fairly trustworthy, going back, another 20 years.
Yeah.
And that has been a significant gain in overall profitability, again, over a 20 or 30 year period. But yeah, the analysts do seem to be frothy yet again. So it's kind of fascinating to watch. And we're going to actually bring this back as we answer an inquiry from a subscriber who was either listening to the archive version of this one later or attending here today. I'm not sure. All
Yeah,
right.
I'm doing a lot of a pretty deep dive right now into a stock called Floor and Decor, FND.
Right.
I'm preparing for a class tomorrow that I'm teaching with Ann Cuniaz to finish up the Adding Judgment series, and we're doing an SSG live on air tomorrow night. But what's interesting to me is that so much of the writing tends to make a big deal of this large retailer bringing more money in from sales. They talk about inflation. They make a big point about inflation, but they never tie the whole thing together in a nice bow. If you're going to make more money, but it's due to inflation, I'm pretty sure that your profitability doesn't change significantly.
Yeah, absolutely. I mean, there are places where you can hold down the costs while raising your prices, but they're pretty rare, actually.
Yep.
All right, so we'll come back to this when we talk about the bigger picture here in a few minutes. But it's back and it's in its previously witnessed glory as before. Oh well. All right, just a quick check in on the groundhog. Once again, Warren Buffett has reassumed the lead. Shouldn't he just go on vacation or go golfing or something? I mean, he just consistently hangs in there. No major changes on here except some of the institutions have bubbled back up. Ken Hebner seems to do well every time the market goes a little bit haywire. But Rob Martin is back near the top. George Mackey, Sean has dropped down to 7th. Some very familiar names there. I see Herb Lemkool is hovering back in the top 10. And again, that whole bevy of clubs right there in the middle of the pack, they are moving around a fair amount. Our names are not on there. I've taken quite a hit with the NASDAQ again. And there's a couple things I did want to point out here, and then Ken, you can point out whatever you like. The average return continues to lag. We continue to have it's the type of market that bothers us as a community quite a bit. You can tell that by the 21 of 168. And there are a couple benchmarks that we like to share. I think it's significant that the value line arithmetic average is doing better than it has in recent years. And that just means that there's a lot of opportunity in that wide berth of stocks that, are not high on everybody's radar screen. That entire list of 1,700 companies. Then the other thing that really tells you quite a bit about what's going on here, these are not typos. ARC, Kathy Wood, has been bouncing around from 158th, and she was 87th last week. And that just tells you how crazy it is. And we opened and talked a little bit in the green room about NVIDIA and how volatile that one has been. That's just one of many innovative stocks that's really quite turbulent. Doesn't even do it justice, Ken.
Yeah, well, I agree with you, Mark. And the only difference I see a lot in a lot of those stocks is that so many of the ones on the Kathy Wood list don't make any money. They have no earnings. compared to an NVIDIA, which has earnings, has very decent earnings, very decent sales, but probably was just pushed to an extreme in a market that couldn't get enough. You know, it was almost panic in the opposite direction. The fear of being left behind with a stock that was going to take off like a rocket. And in fact, it did take off like a rocket, and now it's maybe reestablishing itself at a much more normal valuation point. That's all.
And we do want to keep track of this critter and where he's at. He's annoyingly on the list. And the other one I'll point out is this one. You could cue the Jaws music. Anytime Anna starts making her move, 2-time individual champion, there you go. Some familiar names, but some new ones. All right. One of these weeks or months or something, we're going to have happier news. I can feel it. But as of right now, the best small companies continue to lag the markets. Keep in mind that we do have 2 portfolios at work this year. One is the traditional 20 buy and hold from Halloween to Halloween. And then the blue represents the portfolio, which allows for some changes. We've made 2 changes. We sold eHealth and replaced it with Pachira Biosciences. And that turned out to be a dramatically good move. That must have been my idea, Ken.
Yeah, all the green ones are yours, Mark. Okay. All right.
Actually,
Well, I'm glad the 2 of you agree on that finally.
actually, nothing could be further from the truth. Although I think what was a good team effort on Pachira, the other green ones are definitely Ken's. And Green Tree was replaced with First Foundation, and that's been within the last couple of weeks. So those are just the 2 active management decisions that we've made. By the way, we'll close with a slide here today, which basically just amplifies the fact that China is continuing down that lockdown path, which is kind of amazing. They have lost another 10 to 20% since we exited the position. So that turned out to be a pretty decent decision. And of course, eHealth continues to struggle. But again, nothing on here bothers me a great deal. I see Boston Beer and Medifast amongst the best stocks in this week's update. Not terribly concerned. We do continue to outpace the Russell 2000 growth by a little bit. And we are not sponsored by Circadian Coffee, but we should be. That, by the way, is a boutique coffee shop in Indianapolis. And I actually was just joking around when I talked about drinking circadian coffee recently. So any other comments on there, Ken, or should we just press on?
I think we just press on. This is, I mean, just by its nature, it's a short-term look at the market anyway. We're only going to look at this for a year. And even if we don't surpass the market this year, it's still a pretty darn good. I know you're always very Mr. Positive, but it's still a good exercise to take a look at companies this size and watch what they're doing. Small companies just seem to can't get out of their own way at the moment. Although yesterday, I will say that in my own chapters in my own chapters contest, my portfolio is full of small companies. A lot of them good, solid, up, straight, and parallel candidates, but not a lot of them very well known. And in yesterday's market, the entire contest, every single entry was red, except for mine that went up about $2,400. So maybe the tide is beginning to turn. One of my holdings is Car Gurus, so go Car Gurus. I'm ready for you. Keep moving up there.
You know, there's some good stuff working behind the scenes there. I did notice, by the way, that MKS, this might actually dovetail with what Herb was asking about. Some of these companies, even established companies, can get hit pretty hard, even on the slightest misstep, or if it's not quite as good a step as they were supposed to be making with their next report and that sort of thing. Kim, I'm just wondering, do you actually hold shares of Sharps Compliance? Do you have any awareness of that one?
No, I do not.
Because that's one of the 2 lane stocks. I thought that might have snuck into your portfolio, or
No, I don't have it, and I was looking. It's time for me to send another email to Mr. Rashidian about seeing what's going on. And I think at the end of the month is when they're having their conference and they're doing their all their stock updates. And I do know that I had sent him an email about IBP building products,
mm-hmm.
and it's in their portfolio now.
Okay. Well, we'll watch for their update on Sharp's compliance, because I still like the story, and we'll just continue to hang in there.
Did you notice the immediate downward drift on Axos Financial, Mark,
Mm-hmm.
when it was reported that they were going to be backing a major Trump loan for one of his real estate holdings?
Yeah, I did actually notice that, and that was quite a hit.
It dropped like a rock.
Mm-hmm.
So,
all right, so we'll just I'm sprinkling holy water and throwing salt over my shoulder, and we'll just move on. All right, so with that, let's go ahead and talk a little bit about for the last couple of years. Ken, would you like to set the table for describing these events? And
well, Bink was canceled in 2020 and in 2021, and before they canceled Bink, they moved it around a little bit, and they moved it and then canceled it, and moved it and then canceled it, and we decided at our chapter to try to replace it with a 2-day conference. Actually, it was 2.5 days, and so we put together 5 classes, actually 4 classes plus a stock panel. The stock panel had many of the same people that are on the stock panel at the national convention, and we tried to make it entertaining and pick some stocks that would do well. I think that when you see all 4 of the sets of picks, you'll find out that some of us have gone from the top of the list to the bottom of the list and everywhere in between. Here's my chance at the bottom of the list right here. I have no idea what I was thinking with this twist bioscience, but I identified it as speculative, and it sure was. I'm a terrible speculator, Mark, just absolutely terrible.
Yeah,
I need to learn to stick with the model and not veer very much from it. But here's the results. And Ann Cunha is coming up at the very top. This is the most recent conference. Ann was a member of the panel, and she chose an old-time better investing favorite, Jack Henry. They're a software company, do software for credit unions and small banks. And you just, you never know. A very well-known company in the better investing community. And look at the relative return, 33%. I happen to own Jack Henry, so I'm real happy about that one. I happen to own Visa also that Mark picked, so I'm really happy about that one. And Mark's really happy about that Emergent Biosolutions, aren't you, Mark?
Yeah, in fact, I think I was ahead of Ann until just a few days ago. So this is one that I went back to the well on. As you're going to see in the next couple of slides, it has not done very well over the last few years, and I figured one more time at one more shot at the basket, and it's actually done fairly well. Their business has stabilized. They're getting a little bit less negative coverage, but from top to bottom, these are fun. I was tempted to send out a missing persons posse for you, Ken, when you picked Twist Bioscience, but
I was last, and I have no idea. I must have just had a flashback to something. I don't know.
well,
I will say, Mark, that the majority of this list is good, solid stocks that are worth a second look, especially if they're down quite a bit. And I would highlight Western Alliance Bank. I would highlight Lam Research. I would highlight LGI Homes. I think those 3, among others on the list, are certainly worthy of another look if they're on sale right now, and they appear to be on sale.
yeah, and I think, Kim, go ahead and chime in on PayPal, because I think they've been unjustifiably punished, and it's an interesting story.
What happened with PayPal is they were always trying to get more customers. And what they did with their algorithm is recognize getting more customers is great, but these customers that they were chasing after, they weren't using the product as much and maybe only had 1 or 2 transactions, but the long-term customers of PayPal were increasing their transactions, and so they recognized they're not going to go chasing after more members. The members that they have, they're going to see if they can increase the number of transactions that they have. Well, the CEO and the CFO being forthright of what they were doing, everybody thought, I guess what is all the analysts feel like, oh, they're not going to be getting more customers. Oh, they're not going to make money. Oh, this is horrible. Oh, we're going to have a recession coming. People may not be able to spend their money. Oh, and I'm like, okay, I think this is going to be a huge buying spree. And I presented the stock because it had, at the time, settled down. I didn't expect it to go down another $100.
Yeah.
You just don't know.
It's a good study. I mean, if you take a look at the reliability of that top line over the years, it's something else. So it's just an example. And again, this is as many of our attendees remind us, this is only a few months old, so nothing to get terribly worked up over. Let's go back to the session from conference number 3. And again, a little bit of lackluster results. You can see why we love to involve Hugh McManus and Pat Donnelly. They bring us some very interesting ideas over the years. And Matt Spielman brought Green Brick Partners to this one. You can see that my pick of emergent biosolutions, Ken, has actually moved up to the middle of this list because it was nested pretty well there at the bottom. And Kim was speculating on Ardelyx back in that time frame. She's still holding out hope.
Well, I actually have a green one on this list. That's pretty good, Mark. It's
Yeah,
my old favorite.
Google.
Yeah, my old favorite Google. I couldn't resist. This is about a year's worth of data on this one, I think, isn't it?
Yeah, we're coming up on the 1-year anniversary of this one.
Yeah.
So some other names. Ollie's is on this list also. Ollie's is kind of a compelling story. Charlene has picks in the middle of both packs. So everybody seems to take turns having a clunker and a shining star every once in a while. All right, let's go back to November 2020, and the results actually get a little bit better. They're still actually pretty good collectively. And what jumps off of here, Ken? Sprouts Farmers Market. I don't even remember you doing that.
Well, there it is. And I actually own that in a club. They've been kind of a stealth stock, Mark. They kind of hovered around $20 for maybe an entire year, and then kind of just took off as people kind of discovered what was going on. That in combination with the fact that they started building smaller stores. They started building stores that were more focused on farm market type of produce, and they started doing better than they had been doing with slightly larger stores. So it's certainly an interesting stock study. If you have a moment, I don't know if it's in the buy zone right now or if it's something even close to that, but it is a pretty decent story stock over the last 18 months, going from $20 to the 33 and change.
Mm-hmm. And of course, Hugh is always checking in with companies like BP from time to time, just to kind of trigger us into having a more open mind about this kind of stuff. And wow, once again, he's got a pretty good one there. There's some really good ones on there too. CBS Health with Herb coming in with a pretty good winner there. I'm surprised by Teladoc down at the bottom, but there's my emergent biosolutions for the third time. Actually, this would have been the first time I picked it, and it's really struggled.
That's a painful one down there, isn't it, Mark?
It is. It's got a little more run time on it too. So again, some fairly interesting ones there. And our first conference is actually responsible for some pretty powerful results. We should have invited more people, Ken, because things were pretty hot. This again, this was just a couple months after the onset of the worst stock market hit back in March 2020. So it's only a couple months after that. So you're shopping amongst some bargains back in that time frame, and they certainly have come true. Going to talk a little bit about Stoneco up at the top. Pat Donnelly picked that one, and it basically went up 300 some percent. And at the presentation, we talked about how Pat had at the national convention actually made some other picks that had taken off and done the Roman candle thing. So we actually made a provision as we presented it that if it did that sort of thing, we would put a protective stop on it. And we'll cover that here in a minute. But those are some pretty good picks from top to bottom. And
Mark, as you display these in front of me like this, one after another, maybe I have to write down in big letters and put it somewhere on my computer just to stick to up, straight, and parallel, and I will tend to do much better. I'm actually in the green with both of my stocks on this one here. I'm going to celebrate when we finish the session today.
Well, EPAM went on an excursion. Pretty much everybody here, even the one at the bottom there, I think is a compelling story. Kim's Vectrus. And
EPAM to be down only 5% after what it went through with the Ukraine, what it's going through with the war in the Ukraine and everything, I think is an amazing fact. EPAM just went off. It probably was up near the top of this list for a good year or longer.
Yeah, I mean, there's several things that kind of sing to me a little bit here. I mean, look at Aflac on there. Those type of companies, and look at Kim with Chubb there. A lot of times those type of companies are presented at these type of sessions, and you get kind of a yawn. And then the next thing you know, you're looking at this type of thing. So you got to be careful about making sure that your skepticism is really placed in check. Because like Ken said, some of these are actually, some people would call some of these boring. And I'm not bored by what I'm seeing here. Wild stuff. So those have actually contributed a great deal. So here's a look at Stoneco. The reason that we did this, and we talked about it during the session, is Pat, on 2 other occasions at the National Convention, had picked a stock. The one that I can remember was Deere. DEER is the ticker symbol. And the darn thing had gone up like 600% from one year to the next, but then it actually went back to 50% of the value when he picked it. That's how horrific a Roman candle it was. And
this is not the stock that immediately comes to mind when you say Deere, is it, Mark?
No, this is just an example. This is Stoneco. He actually
no. But what I mean, when he picked this stock DEER, that's not John Deere, is it?
It's not John Deere. No, in fact,
that's what I thought. Okay.
It was like an apparel retailer out of China, and I can't remember exactly what the product was. This happens to be the barcode at your table in restaurants. It's actually originated in Brazil, and Warren Buffett had bought, along with Pat, a fairly sizable stake in the company back at that time frame. And you can see that basically it had gone up 300%. You can see that basically the RSI, the volume weighted RSI had reached 90. And that's where we cooled on a little bit and again put in the protective stop. And then the other stock that comes to mind, Ken, is the time that you and I were with Pat in Pittsburgh, and we said, "What's your stock, Pat?" And he says, "Where food comes from." We said, "Well, what's your stock?" "Where food comes from is my stock." And he played with us for about 2 minutes, and that's the actual name of the company and the ticker symbol right there. And I don't know if you'd noticed, Ken, but that had actually jumped up here fairly recently.
Well, I sent that to you, Mark, as one of the ones that I kind of was looking at for our replacement stock. I didn't follow through on it, and maybe I should have. Huh?
I think it had already jumped up by that time. So
had it? Okay.
And it's a small company. I mean, You buy a share in that company, you're going to get a Christmas card. So good stuff. So that's the reason that it is like that. What it all adds up to is on the next slide. You take all four of them in combination and look at the rate of return. You actually do get a 15.4% rate of return for the collective. And that really is all that matters versus a stock market that's checking in at about 10% over that same time frame. So good, clean fun and some interesting names. And I'll second Ken's motion that several of those companies are still pretty good studies in combination with the best small companies list. If you find a company that has been pretty well hammered but still has a good outlook and a good story, it's probably a pretty good study.
Yeah, Dennis makes a really good point, Mark, in our audience discussion on the side here. He says that you know, sometimes it's useful to present a recommendation on a stock that you think is going to be met with a yawn, and to present the recommendation trying to hide the identity of the company until you get far enough along to excite people about what the SSG looks like, what the characteristics of the growth look like, and then reveal what you're talking about. He says stocks like Aflac or General Mills or General Dynamics that I picked, or AbbVie, those are companies that maybe are too well known by our community and are discounted as having any ability to grow anymore. And yet you can see the results for yourself. They have relative returns that are beating the market on a year when the market was doing high 20s, low 30s in performance.
Yeah, I think that's a great tip. I can think back to Clayton Homes being an example of a company, or some of the Dollar Tree type stores. Some of us have biases against those companies, and you know, the Clayton Homes regarded as, you know, trailers on wheels, and that's not what they are. But I can remember, you know, that bias actually getting in the way of listening to the presentation back in that time frame. Good
Yeah,
stuff.
I know that a lot of our folks seem to think that if you're going to get a high flyer, you have to pick something that nobody's ever heard of before, or you have to pick something that's really, really high tech. And in fact, when you kind of roll through the ones that were in green from these 4 sessions, you're not seeing very many names that are not well-known names. Stoneco is probably the exception that proves the rule.
Mm-hmm. Yeah, there are some companies. ASE Semiconductor is a new name, but yeah, I had high hopes for ReproMed. I need to go back and see if I still have high hopes. ARMD. It's apparently.
I'm not looking at Twist Bioscience again, Mark. I'm not even
I,
going to look at it.
I
Okay.
still think that's a good story with the refunding of police departments. All right, let's switch gears and talk about correspondence.
No, Mark. Twist was not the thing that I presented at one of the round tables, and that was the bolo that wrapped around people. That was a
Oh,
whole
yeah,
different
yeah.
wild company that I was
Oh,
that I lost my mind on.
That's another one. What's not to like with that
Yeah.
one too? Yeah.
Yeah, I didn't say that on that one, Mark. Okay.
All right. Let's talk a little bit about forecasting and some current day conditions, and just kind of chat a little bit about what we are faced with. You know, again, the evaluation and the forecasting used in our community is to really build and using your imagination to build what that company might look like 5 years out. And part of that process includes estimating a price to earnings ratio to approximate a price 5 years in the future. Problem is, in the last 5 years, PE ratios seem to be clearly above average and will likely decrease in the future as interest rates are increased. Again, in a high inflation environment, you can have that. So that's the kind of thing. And again, he just says that he appreciates some of the stuff we're doing. How bad can it get? In a high inflation environment, high interest rate environment, yeah. This is something we have to remind, especially younger people, that back in the 70s, early 80s, we actually had single digit PE ratios on average for stocks. So it can happen. I don't look for that to happen, but it's not impossible. And this person's been around in the community for quite a long time. What's your take on the perspective in the perception, Ken?
Well, Mark, from my point of view, in this century, and I'll start at maybe around 2004 or 5. Uh, we've experienced two factors that, to my mind at least, have contributed to much higher than normal PE ratios. One of them is really cheap money. 0% interest was not uncommon for people to get while they were financing major purchases in their life. I bought 3 different cars since 2005, and I haven't paid a dime of interest on any of those car loans. The other thing that I think is working right now to help push PE ratios downward, and that was not present, which allowed PE ratios to expand, was inflation. I don't think most folks are willing to take a long-term look at inflation and note that inflation really around 3, 4, 5% was considered the norm for a long, long period of time. And there were times in the 70s and 80s when we exceeded that average by huge, huge amounts. So when you have cheap money and basically inflation at 2% or less for a long period of time, you give people the license to maybe be a little bit wild and crazy with PE ratios. I think as the Federal Reserve begins to tighten the screws, raises interest rates to a much more normal type of environment, and when inflation bites us in the butt and maybe sticks around for longer than we're expecting, I think that's a great impetus for PE ratios to begin to decline. And whoever wrote this note to us, I agree with them 100%. My future stock studies are showing PE contraction in a lot of cases, especially when I feel that the PE ratios are outside the range of what I might consider normalcy. I can think back to my earlier work with Better Investing when I wouldn't even consider a PE ratio higher than 34 or 35. And now I find myself, or I found myself in the last 5 or 6 years, looking at PE ratios of 40 and 45 and thinking, well, it is what it is. That's what you're going to have to pay to get that stock. All in all, I agree with this comment 150%, Mark.
Yeah, I think kind of in the same terms. I think that we did have an inflation report today, 8.5 or 8.6% year over year, which is a 40-year high. I do think that at some point we are going to retreat into this 15 to 20 range, is kind of my thinking. I'm not expecting this. Hopefully I'm retired or beyond retired by the time, if that ever hits again. But I do think that returning into that upper teens is probably a reasonable expectation, and you might want to factor it into your studies. It's not going to have a really huge impact, but I agree, as you've said, Ken. Same thing. Here's the look from the Value Line weekly report that comes out. Again, just to give some context and perspective, we are at the upper end of the range a little bit. We tend to favor 15 to 16 over the longer term, but more in the 18 range. But I would encourage everybody to, this is a little bit tough to read as graphs go, but here's your PE in the middle and the scales over here. Again, the normal range is in that 10 to 20 range over that time frame. And I wouldn't say that we are excruciatingly high, maybe a little bit elevated, and that should be reflected, but it's certainly not off the scale high either. So again, temper any studies, but not dramatically impact them in my opinion.
Well, and Mark, I don't think that I'm saying take what you used to have as a 35 and cut it to a 20. But I do think maybe 35 becomes 32 or even 30
Yeah.
into the future. Use your head. It's swampy ground at best when you start talking about average PEs, because there are so many definitions of PE to start with, and you go out on the internet, you try to pull charts down, and even deciding whether you're comparing apples to apples is very difficult with a lot of the charts that are commonly available. So be very careful when you're throwing around an average PE number. I think the generally accepted average is exactly what Mark said, somewhere around 15, 16 over a pretty long period of time. We're talking maybe 50 years. So it's like I said, it's very swampy ground.
Yeah.
When you start comparing PEs, you have to know what exactly the definition of PE is that's being used to do all the calculations.
Yeah, and again, what Nicholson taught us is that PEs are a characteristic of a company's industry, and you just have to know that if you're in an industry where the PEs are normally 8 to 10 versus one where they're normally 28 to 30, you got to make that distinction also.
Absolutely. Absolutely.
All right, and just for fun, I'd already done this. I thought I would use it. Here's a look that we had actually taken approximately a year ago. At the value line industrials. This leaves out all the financials and asset-based companies. And just wanted to take a closer look because it illustrates what we were talking about as we opened the session. Again, the impact of COVID is clear. Sales went down, earnings got massacred temporarily. You can see that all over the place here. You can see what happened to stock prices. That net margin, again, that's an average net margin over all of the companies it ends up being about 1,300 companies that are value line industrials. And you can definitely see the impact, and you can see the recovery from the chasm there. Looking at current day situations, somewhere around a 4% growth rate. This is the one that jumps off the page at me, and I just scratch my head over. It's analyst consensus numbers. Again, they're up here for their 5-year forecast. I think that's way too optimistic, in my opinion. And the PE, again, I wouldn't be surprised to see that actually come in a little bit lower than 18 5 years from now. The net result of it all, things are probably not as overpriced as some people think they are, but still in individual stock studies, I would incorporate some of the thinking that we've shared here. What are your thoughts, Ken?
Well, my thoughts are only to remind people that if you don't earn anything, you don't have a PE. So those companies aren't even included in this discussion. Keep that in mind, folks. There is no PE for a company that doesn't earn. There's no E. There's no denominator. And you can't divide by no denominator or a zero.
Yep. And the other thing to point out, and that gives context, in my opinion, our projected return on value doesn't use PE either. And the fact that these numbers these are decent numbers. I think that 11 might be just a shade high. But again, it takes the PE problem out of the situation. And as Ken and I have been demonstrating, we are constantly taking a look at these, one with the left eye, one with the right eye, as we're doing our studies. And we do like to see them resemble each other. Okay.
And Mark, I think 9.4 and 11.1 come pretty close to being they're cousins, you know.
Yep. And trimming a little bit off of this one would actually lower both of them.
Yeah.
And, I think we'll just leave it at that for now. Do notice, though, however, this is the perception that I think the writer is feeling. That's the PE ratios over the last few years, and it's absolutely normal to expect something to go back into this range here going forward. It's right there in blue and white. All right. Just one last fun tweet to leave with, and probably we'll come back to this one. There's tickers on here I was not familiar with, Ken, so I had to go looking around a little bit. I like the screen that the guy did. I'm disappointed I didn't think of it first, but he basically kicked out several companies including several that I don't know anything about. And want to make sure that we're covering them and taking a look, because these are companies that are projected to have pretty decent profitability, at least when it comes to cash flow. And Evo, is that one new to you, Ken?
Evo is brand new. I'm surprised that one of the companies that I'm been looking at, coming from some quote hot tips unquote, is on this list. It's that sixth one, that ZI. I'm awfully surprised to see anything that I'm looking at on a list like this.
Yeah, well, NVIDIA is obviously on here. Datadog, Airbnb,
Yep.
Docs is one that's been on there. Coinbase, one of Pat's recent picks. I think that's good. Got a good long-term look. This one is showing up on a lot of institutional, a lot of Rhino portfolios. I had really not paid that much attention to it. It's the words for it are down here. It's basically business model and finance, in their opinion, from a different perspective. The company name actually stands for Start Over Again. And again, it's in that electronic, Bitcoin, all of that type arena. Definitely worth taking a closer look at. And DLO is in the same type of application. Again, I don't know if they're direct competitors or whatever, but pretty big emphasis on electronic transactions.
Is that CrowdStrike number 8, Mark? Computer security, is that what that is?
That one I am familiar with, and that
Okay.
one's up there. So we'll definitely make sure that we have coverage of all of these. And this is just a nudge. And I definitely want to take a closer look at Evotech. The stuff that I see here in this description, I find quite compelling. So we'll take a look.
I wonder, Mark, if this Evotech has any similarities to our old friend Simulations Plus, whether, exactly how are they coming up with the solutions for the pharmaceutical and biotech companies. It might make a really interesting read.
That's exactly the first thought that I had, Ken. The Simulations Plus, are they in a similar business, a competitive business, possibly complementary? Who knows? So I guess we'll find out
Okay.
as we dig in a little bit deeper. So again, just demonstrating that every once in a while something on Twitter's worthwhile and might nudge in the proper direction. Just a reminder that we will be taking a look at this book, although Kim says that her book club actually truncated it and did a partial study of it. So we might do some of the same depending on what we encounter as we get deeper into the book, but that's a few weeks out. Quick reminder that we do archive all of these sessions, including the roundtables and bull sessions and the conferences. What I've highlighted for you here is if you go to our page and you actually click through on playlists, you can go back and actually access any of those approximately 20 presentations at those 4 conferences. And if you want to go back and see what was actually said about a particular stock, you can dive right into it during the stock panel selection. Okay, and please subscribe. We'd like that. Here's just a quick reminder that we are going to do a special edition of the Roundtable on April 26th. That's 2 weeks out. We'll be joined by a special guest damsel, Candace Baker. And the session, we're going to actually break it into 2 parts. The first part's going to be an educational session, which actually dovetails pretty nicely with some of the things we've said here today about, and I'm air quoting again, Ken, boring mid-sized companies. I know nobody knew I could see it, but I'm doing the air quotes thing again. Those boring companies that often can fall into that classification of the medium-sized workhorses, and we're going to actually do an entire session celebrating the workhorses of our portfolios in advance of that, and then we'll have a traditional roundtable after that on April 26th. If you have any questions, just send us a note. The registration information is up at the chapter websites and at Manifest Investing. Any other thoughts on that, Ken?
No, I look forward to working with Candace. I've met her a number of times and find her charming and interesting and a good speaker. So it'll be nice to hear a new voice along with the three guys here. We encourage all of you to come, and that link that you find either on our website or the St. Louis chapter website or the Manifest Investing website, those links can be shared with anybody. There's nothing proprietary about them, and they can be used as many times to register as you want. So if you want to copy it off or copy the URL off or something and send it to an entire club or something like that, feel free to do that. Natalie will be getting the reminder email out right when we get a little bit closer to the whole session, and her email can always be forwarded to any and all that you might choose to want to invite.
Now, I'm sure Cy is concerned that this is a conspiracy to have more St. Louis Cardinal fans on the panel than Atlanta Braves fans. So be ready for that too.
I'm neutral, Mark. Okay.
You're neutral. You know you're a Guardian.
That's right. I'm not an Indians fan anymore. I'm a Guardians fan now. Okay.
All right, just a couple images, just a date image stamp the week. The CPI inflation number came out this morning. This graphic was from Seeking Alpha, and you can see what they think about inflation, particularly at the grocery store. That reminded me of Wile E. Coyote, and those kind of go together. And at the bottom of the page, I'm grateful that we exited Green Tree because I think that the situation in China is pretty serious. That is Shanghai has 25 million people. And those are two, pictures that would normally be completely jammed with people and automobiles, and that's the current condition of Shanghai. So it's definitely a moment worth noting, and let's hope that that doesn't get out of control. But with that, I think we can go ahead and sign off. Ken, you have any other thoughts or any other comments to add?
No, I wish you well, and I won't be with you next week. We're going to be traveling, but I look forward to coming back on Roundtable April 26th, and we'll do a bull session at 2 o'clock on that day again, too.
Okay, and as far as next week's bull session, I'm not 100% committed to it yet. I actually have oral surgery to do tomorrow that could be quite, it might knock me out for a couple of days. So kind of waiting to see how that goes. But everybody cross your fingers for my dentist, that he gets a good night's sleep tonight. So with that, thanks for coming. I'm going to go ahead and shut down the recording. We can stick around for a minute. But
maybe I bring the camera down, Mark, and catch you as you're coming out of the nitrous oxide,
You can always do that. No, I'm not even going to go there. All right.
All right.
Take care, everybody.